Tesla's average cost per vehicle manufactured in the third quarter was a pretty staggering $35,000 US. That includes production of the Cybertruck. As a result, its profitability soared. Automotive gross margins were more than double that of its competitor, the Volkswagen Group. Analysts are surprised by this. $25 billion in revenue was a little bit low what experts predicted, but profits were so high that Tesla's stock price as a result has skyrocketed. So how can you easily analyze these results? And what do they really mean? Well, here's a really good number to share with you guys. That is, Tesla posted an operating cash flow of $6.3 billion in the third quarter. Free cash flow was $2.7 billion. They also saw a $2.9 billion increase in their cash and investments in the third quarter to $33.6 billion. This is a new record. Basically, Tesla has $33.6 billion in cash and zero debts. Compare that with basically all of their rivals in the legacy auto space. You can see really now, guys, the tremendous advantage Tesla has over its rivals. It's in an incredibly strong position with cash, investments, productive factories that are making big profits, and products that people actually want. Tesla's stock prices jumped nearly 10% after its Q3 earnings report. Why did this happen? I mean, Tesla stock price gone from about $208 to $238, something like that. This is aftermarket trading, but either way, this is a huge gain. The market is pretty surprised by this, especially considering Tesla did not hit its expected revenues. Well, it did something that's actually significantly better than that, which matters far more than revenue. Remember, revenue is just the amount of money you bring in. You might actually make nothing on that. In fact, you might make a loss. More money might be going out. So that's the big reason. Kind of gives you an insight and really an idea here, because revenues, General Motors reported $45 billion in revenues, but their profits, well, that's another story. Hello, my friends. Welcome to the channel. I'm Sam Evans. Great to have you with us. And I think I've just noticed today I'm getting some grey hairs there. Anyhow, on another note, Tesla here, guys. Tesla delivered pretty good results here. In fact, I would say incredible results considering the average sales price for their cars, the Model 3 and the Model Y, obviously the two cars that are sold globally, is lower than ever. Really incredible results also that they made a profit on the Cybertruck. I don't know how the hell they did that, but that's incredible. Cybertruck is being built in like, boutique Porsche level type numbers, right? Very small number of vehicles. That's when vehicles are expensive to produce. If Tesla was making, say, 100 times more Cybertrucks, you would expect them to make a profit. But at these boutique levels, it's pretty remarkable they've been able to do this. So, earnings per share for Tesla, 72 cents versus 59 cents expected. That's an enormous difference, right? That's where the market's saying, okay, wow. Profits, 20% higher than expected profits. Okay, a lot of this is tying into the fact that Tesla is paying less for batteries than it ever has before. So the cost that Tesla is paying, say, Cadel and BYD for batteries in their factory for Germany and their factory for China, which is, if you put those two factories together, that's well over 50% of Tesla's car production worldwide. Cost for those batteries has never, ever been lower. A lot of analysts are saying Tesla pays less for batteries than everyone else. So they're making really good profits on their Chinese vehicle sales in particular, not just in China, but the vehicles that are manufactured in China and then sold worldwide. So this means that revenue growth was at its highest level for a year, although it very, very narrowly missed analyst estimates. But anyway, the key point here, revenue growth was really good. Profit was incredible. Profit margins were stronger than expected by, I don't think any analyst actually went and said, yeah, Tesla's profits are going to be at this level. EV production, actually, as in car production and deliveries, both beat expectations. Production rose by 9%, deliveries rose by 6%. The Cybertruck was the real shock. I don't think anyone expected this. It was the third best selling electric vehicle in the United States. Excuse the noise, that's fighter jets. I live near an army base. The first and second best-selling vehicles in the United States were the Tesla Model Y and the Tesla Model 3. Third place was the Cybertruck. So this is a bit of a surprise to me. I did not expect the Cybertruck to be in third place in the United States. I honestly thought that something like maybe a Mustang Mach-E, maybe the Chevy Equinox, right? Equinox is now $35,000. I honestly thought they'd beat Tesla easily, considering the average sales price for a Cybertruck was about $105,000. Obviously, you have the Foundation series, $100,000 for the non-Cyber Beast, so the dual motor. The tri-motor is $120,000, but most people were buying the dual motor. So the average price for Cybertruck's over 105, maybe even 110,000 US dollars. Quite expensive. You really would think that, you know, a value-based electric car from one of Tesla's rivals would easily beat the Cybertruck. Anyhow, the outlook. What's the outlook from here? Well, the outlook's actually really positive because battery prices are said to be on the decline even further, particularly from Chinese manufacturers. And the fourth quarter is generally the best quarter of the year for Tesla. And the reason is because the Chinese car market, it's at its peak in the fourth quarter. October, November, and December are always the three best months of the year for China. This 9% plus surge in post-market trading of Tesla shares, it's about 10% now in Tesla stock price, shows the market is loving what it's hearing. I mean, why wouldn't you? Tesla is still planning on putting some more affordable models into production in the first half of 2025. Don't know what those are yet. I actually think it's just a cheaper version of the Model 3 and the Model Y. They'll have a smaller battery pack and probably have around 220 miles of range for this smaller battery pack Model 3 and Model Y. But remember, Tesla is about to launch a brand new vehicle. These numbers are really surprising considering Tesla is still selling. Their number one most important vehicle is old. Everyone knows there's a new version coming within a couple of months. Tesla have already started pre-production of the Model Y Juniper. This is going to be a focus for investors. Most of 2024's earnings reports have been centered on talking about the next gen platform rather than delivering earnings growth. The fact that Musk is now moving towards a path where he can monetize this new platform has had a positive impact on the share price. The company said it expects slight growth in EV deliveries this year versus 2023. So obviously Tesla is expecting that sales in the fourth quarter of 2024 will be a bit better than sales in the fourth quarter of 2023. But there is still a major hurdle for Tesla to overcome. Still some challenges here. Tesla slipped on its vehicle delivery targets in the first half of this year. Q4 will need to see some pretty good delivery growth to meet their targets. They would need to deliver 30,000 more vehicles than in the third quarter of 2024 versus the third quarter of 2023 to meet their self-imposed target of 1.8 million deliveries. Tesla, I think they can do it. I think that they will beat it, but some analysts say they won't. Tesla are probably optimistic that one, demand is still going to be strong for the Model Y over the next 3 months. Two, it can meet a hefty delivery schedule. Tesla's got quite a lot going on. It's also building its Megapack factory in China. A lot of the business growth now is not around the EV story, it's around the battery story. Getting more batteries out there. And Tesla's battery division is growing at a pace that is much faster than its EV car delivery division. Speaking of that, sales of Tesla Powerwall chargers are set for a record second quarter of growth, and their new Powerwall 3 is also boosting Tesla's sales. Powerwall 3 uses lithium iron phosphate batteries. It can actually send out a lot more power. Powerwall 3 is a definite improvement over Powerwall 2, and a lot of people are buying these new Powerwall 3s. Tesla does make high margins on the Powerwall. The most impressive aspect of these earnings is the automotive gross margin for Q3, which was a staggering 17.1%. That is extremely high versus expectations of 14.9%. That's basically industry leading. I don't know how Tesla's doing that. That is truly remarkable, 17.1%. That means Tesla's automotive gross margin is twice that of the Volkswagen Group, double. Tesla making twice as much money on average in terms of percentage figures than the Volkswagen Group is on their car sales. That is incredible considering that all other legacy automakers are still making a loss on electric cars. It does show you really that Tesla is a long way ahead of all of their rivals. That probably includes BYD. BYD's gross margins on EVs are nowhere near what Tesla's are. Tesla is saying that margins are being boosted by lower cost per vehicle in terms of production and materials. And that really does come down to paying less for battery packs more than anything else. This is a sign, though, that lower levels of inflation are starting to have an impact on corporate bottom lines. Tesla said that it is also seeing an uplift in demand for its artificial intelligence and self-driving technology, which is boosting margins. So more people are buying full self-driving as they believe that Tesla is getting closer to actually getting it licensed, getting it on the roads. Overall, these earnings are fantastic. These results are better than I think anyone expected. There is actual delivery growth. Gross margins are moving higher. The cost of production is coming down, and Tesla is regaining its pricing power, which is not a story that anyone would have thought would have been happening 6 months ago. Would anyone have predicted all these positive news for Tesla? I don't think so. You got to join that up with the fact that Tesla is investing huge amounts of money, not into EVs. It's not really focusing on EVs as much. It's focusing on artificial intelligence. It's focusing on full self-driving. It's focusing on robotics. The lower cost of raw materials, though, which was flagged in the earnings report, along with more efficiency in its EV production line, is a winner with traders as the stock is trading much higher. Tesla's share price, of course, is volatile, and honestly, it could go up and down. Normally, Tesla has an earnings call, or they have a delivery event, or they have some kind of a technology event, and the share price goes down. But I think this news was so positive that it's had the opposite effect. This is a very positive start to the earnings seasons for the so-called Magnificent Seven, but it will be enough. Will it be enough to boost the rest of the market? The Magnificent Seven, which includes Apple, Facebook, Amazon, they have underperformed the broader S&P 500 and the Dow Jones Index. So for some reason, growth stocks haven't been growing as much this year. But another way to look at Tesla's results here is through the prism of consumer trends. Tesla is seen as a bellwether for electric car demand. Analysts are saying EV sales worldwide have gone down. The truth is, globally this year, fully electric car sales have increased by 28%. After contracting in recent quarters, these results suggest demand for electric cars is back and it's here to stay. Added to that, the Tesla results compare very favorably with Kering's. The luxury goods company said that income for 2024 would be at the lowest level for 8 years, 25% down in Q3 versus a year ago. Now, fxstreet.com says Gucci tumbled sharply. Sales at Gucci were down 25% in the third quarter of this year. But obviously, Tesla, their sales actually are rising while luxury brand sales are going down. So this is kind of a trend we see normally. You see an increase in luxury brand products and sales. You see an increase in electric car sales. So I think the market has shifted away from this kind of concept of more money, buying more stuff, we buy more electric cars. It's shifted away from this to the point where now people are just buying electric cars purely on their merits, purely because they are a better value proposition than an internal combustion engine vehicle. The rising fortunes of Tesla, says fxstreet.com, suggest that consumers are shifting their preferences towards reasonably priced products, utility, tech capabilities, particularly tech capabilities, and the promise of bigger and better technology features to come, which Tesla is promising with its next generation platform, with its Tesla Model Y Juniper, with its robotaxi, with its cybertaxi, and also with its robotics and energy divisions. This is a growth story, Tesla, and I don't see any signs of it slowing down. If anything, I think over the next 12 months, Tesla's revenue and profits will actually increase. Now, in terms of Tesla's delivery numbers, we already reported this, you already know what they are. Tesla produced a total of 469,800 vehicles, comprised of 443,668 Model 3s and Ys and 26,000 other vehicles. That includes the Model X, the Model S, and the Cybertruck. Q3 deliveries were listed at 462,900, comprised of 439,975 Model 3s and Ys and 23,000 other vehicles, Cybertruck, Model X, Model S. Now, in total, Tesla have produced 7 million vehicles at the Fremont factory, and it appears as though efficiency at the factory is increasing drastically. Tesla's revenue was $25.2 billion. Automotive revenues were $20 billion. In comparison, FactSet expected Tesla's Q3 2024 revenue to hit $25.47 billion, and total revenue was expected to be $25.3 billion. So Tesla's revenue, like I said, was a bit lower, but its earnings per share and its profitability was so much higher than expected that, as you can see, this has been a huge success for Tesla. So what are your thoughts, guys? What do you see for Tesla on the horizon? Like I said, I predicted on the channel within the last few weeks, Tesla stock would continue to grow over the next 12 months. I believe it will be much, much higher. I believe it will be orders of magnitude higher in 2030 than what it is today. Now, yes, there's still a lot of negativity around the company, but the growth prospects of Tesla are just too positive, too strong to ignore. Thanks for watching.